it's Sam here at NZ Mortgages. Today we are here with Nicole from Kendons. Nicole, can you tell us a little bit about what you do?
Yep, so I'm a senior accountant slash business advisor, I guess you'd call us, here at Kendons. My role is doing compliance for annual accounts and also working with our clients on a day-to-day basis, just helping them with their business needs, information for the bank, information that you might need, and yeah.
So we know that if you're self-employed, the bank is going to ask us for 2 years financials. We're seeing an increase of being asked that these must be signed by a chartered accountant. Can you tell us the difference between a chartered accountant versus an accountant?
Yeah, so a chartered accountant, we have a professional accreditation. What it means is we're bound by them and the ethics code that they set. It also means we're kind of trained to look at the bigger picture of a business or the individuals as opposed to just doing a set of accounts for them.
Okay, perfect, cool. We're halfway through the financial year now, so we're getting asked a lot about a cash flow forecast and we need to provide this. Can you tell us what this is and what is required to prepare one?
Yeah, so generally the reason a bank is asking for a cash flow forecast is that they want to make sure that the business or the individual can repay their lending. So basically our job is to show the bank that this is what we can see the business doing in the next 12 months, their income, their costs, their operating expenses, so that they can then see that, oh yeah, there is enough money in the business to repay their loan.
Okay, so essentially you're forecasting what their net profit's going to be for the next financial year?
Yep, that's basically what we try to do,
Yeah,
the best we can.
And what would a rough time frame be to prepare a cash flow forecast? An ideal world?
Ideally, I know clients like to see it turned around pretty fast.
Yeah.
We go through there is a bit of a process, I guess, behind the scenes of sitting down with the client and then collating the information.
Yeah.
Depending on the size of the cash flow of the business, it depends if we use a software or we do it in Excel.
So it's
and
not
then
a 5-minute job.
It's definitely not a 5-minute job, and we like to, we want it to be reviewed, and so someone else looks over it, and then we'd sit down with the client again maybe and just make sure they were happy with the figures that we got.
Okay, perfect, cool.
Yeah.
Thank you. So we know that several lenders, they will accept a profit and loss statement when it comes to looking at some lending, but depending on how far we are through the financial year, we may be asked for management accounts. Can you tell us what is the difference between the profit and loss and management accounts?
Profit and loss is just your page from zero. There would be that any client can get that information from their software.
Okay.
Management accounts are probably more for a business that done on a month-to-month basis or a quarterly basis and kind of looks at the cash flow of the business. Probably not the same scrutiny level as a set of accounts that we would prepare at the end of the year. But it would still give the banks an idea of how a business was doing on a month-by-month basis.
Okay.
I think it would be letting the banks know that if it was just a profit or loss from the client's software, there's nobody's actually glanced over or reviewed it to have a look to make sure that is okay and things are in the right spot. You're relying on the client there.
Okay,
as
perfect.
opposed to an accountant.
Cool, thank you. We hear a lot of different opinions and conflicting information about when purchasing an investment property, it must be an LTC. Can you tell us what an LTC is, and is there still a benefit to having an LTC?
So an LTC is known as a look-through company. It is a type of company that's a separate legal entity, but works like a partnership so that any profit or losses from that flow through to the individuals. The reason they were so popular, especially with rental properties and things like that, is when the rentals made a loss, that then flowed through to the individual's tax returns. Now that they've brought in the ring-fence losses, there's not really any use of them anymore because those losses that the rental property is making are stuck to that rental property or a group of rental properties. So the individual's not gaining anything from it.
But there's probably still some special circumstances where it is still beneficial to have it, and it's probably best that someone looking to purchase an investment property engages with someone such as yourself to see if that's best for them.
Definitely, yeah. I think it's one of those things when you are looking to invest or purchase a property, and that it's good to talk to an accountant to kind of work out those things and how to set it up and that kind of thing, yeah.
Okay,
definitely.
so we receive a number of inquiries about Brightline and if it's applicable to someone. Can you tell us a little bit about Brightline and why is it different between an established property and a new property?
Yeah, so the Brightline rule was brought in by the government as a tax against investment properties for a gain that was made when that property was sold.
Okay.
There is different rules around the Brightline depending on the type of property, like you say, and that depends if it's a new build, an existing property, kind of the age, I guess, of that property.
Okay,
So it's another one where talk to your accountant, because we need to go back and look at when it was purchased, the settlement dates and all that kind of stuff as well to work out what that bright line is.
Okay, so if someone was looking to sell their investment property, they should maybe chat with you first to see if they're going to be up for a bright line tax. As such.
Exactly, yeah, definitely, because that tax they have to pay is that gain they're going to make. And we've seen peaks in the market in that. So depending, and there's such a fine line of a period when it can affect them.
Thank you so much for your time today, Nicole. We really appreciate it. If somebody was looking to engage your services, whether they're looking at doing something new or maybe even changing existing providers, how can someone reach out to the team at Kendons?
Yeah, so if they just want to flick us an email, kendons@accounting.co.nz, we offer a free complimentary 1-hour meeting, and so we can meet with them, have a bit of chat, see what their needs are and see how we can help them.
Yeah, cool. And can you assist with anyone across New Zealand? Are you quite big on the Zoom
teams?
Yeah,
these days we've got clients all over New Zealand. We've got some international clients as well.
Fantastic.
So happy to help anyone.
Okay, cool. Thank you very much.
No worries.
And as always, if you have any inquiries about your mortgage, nzmortgages.co.nz. Thank you.